This is the Barita Podcast, which is a medium for information purposes only. This podcast is not a recommendation to buy or sell any securities. This isn't a research report, nor intended to serve as a basis for making any investment decisions. Contact a licensed investment advisor before making any financial decisions. Let's get into the Barita Podcast.
All right, thanks guys for joining us again for the Barita Podcast. Remember, you can get past episodes at barita.com/podcast. So I'm joined today by Awah, Muirhead. How you doing?
It's a pleasure to be here, all.
Right, I was going to say the newest member of the investment banking team, but you add somebody new every week.
Yeah, so. yeah. Not the newest, but one off.
Yeah, but fresh, right?
Fresh.
Still fresh. All right, so I mean, talk to us about it. How's the new role? What's the new role? What is investment banking? We can start off like that.
Yeah. So, as you say, Raul, this is officially a new role for me. But unofficially, I've been doing some amount of investment banking since I've been here at Barita. Right? So the transition was not particularly difficult. It was fairly smooth. Now, in terms of the role itself, what we do, essentially, I'd say we're almost like builders of nations. Eh?
Wow. Just a humble nation builder.
Yeah, but I mean, if you think about it, at the end of the day, what investment bankers do is we essentially bring capital together to its most efficient use. So let's say you see an opportunity to build a commercial complex down west or something, right? You don't have the money to do that. You come to an investment bank and you say, listen, I have this great idea. It's going to cost me $2 billion. I have $400 million. What you can do for me, right? We get the capital, we put that together, we pool money together essentially, and then we make it happen, right? And that's how nations are built. So it's not just a commercial complex, it's schools, it's roads, it's infrastructure in general, right? So we're doing more and more deals with the formation of more and more capital and the allocation of that capital towards its most efficient use. That's how nations are built over time.
So you're the anti-Thanos.
That's one way. The snap doesn't get rid of people, right? It brings people together.
You just build more nations. It's like, all right, no big deal, just a superhero. All right, cool. But tell us, what's the difference between a commercial bank and an investment bank?
All right, so I mean, it's historical, right? So if we go back quite a bit, and I don't want to make this prolonged, but if
19th century US.
Yeah, so if we think about 1929, that was the start of the Great Depression, right?
Yeah.
And one of the main reasons why the Great Depression had started was because banks weren't heavily regulated, right? So you know how a regular bank works. Somebody deposits money and the bank then lends out that money to somebody else, right? Now, at the time, banks were doing more than just lending, right? They were lending aggressively. Yeah. And they were, in addition to that, using the money from depositors to buy into the stock market, which is generally considered more risky, right? So excessive amounts of that created a collapse, which created the greatest recession we've had in more than a century, which was the Great Depression, and it lasted about 10 years, right? So on the back of that, about 4 years after the Great Depression started, the US government said, listen, we need to separate what is a commercial bank and what is an investment bank, right? So the commercial bank was situated in such a place where it took deposits from depositors and it loaned that money out. Yeah. Right. So that is the plain vanilla commercial bank that has existed for more than a century. The investment bankers, however, they don't take deposits, right? But they do gather capital in various ways. And then they utilize that capital, similar to how commercial banks utilize it, but a bit more aggressively, right? So you can come to an investment bank and say, listen, I need to build out a road. But it's not as easy to go to a commercial bank and ask for that. They're more tightly regulated. And of course, they get money from depositors, right?
Yeah.
So your regular, everyday individual, you and me, we want to make a savings account, we go to a commercial bank.
Yeah.
If we want a savings account, we can never go to an investment bank, right? They'll never have an open door for that. But they are open for persons that are more accredited, billionaires, multimillionaires, to bring capital in and then utilize that capital to more efficient uses.
And then institutions as well, right?
And institutions as well, definitely. So,
Okay.
I mean, that broadly defines the line between commercial versus investment banking.
Okay. So, I mean, the investment banks go for longer tenures as well, right?
Yeah, so essentially investment banks tend to dabble in the bond market, while commercial banks tend to be situated along the lines of loans, right? So if you need a loan, you go to the commercial bank.
Yeah.
If you want a bond, you generally go to the investment bank. Now, as you said, bonds can go for much longer tenures than a loan, right? Because at the end of the day, banks want their money back, right? Investors too, of course, but bonds have matriculated in such a way that they're very diverse, they're very adaptive, and in some cases they're nations, they are investors that who have no issue holding a perpetual bond.
Yeah.
Right. So a perpetual bond never repays the principal. It just continuously pays by the interest into perpetuity. So as I mentioned, nation, bonds are not limited to individuals or companies. Bonds can be invested in by actual nations, right? So if you think about a nation tends to live on forever, right? And of course, the appetite then for something into perpetuity would be much greater than somebody who is actually investing, which creates an avenue for bonds, creates a need for bonds, right? Of different types.
Yeah.
Commercial banking and loans are less diverse and more targeted to more individual customers and small, medium-sized enterprises, etc.
Okay. All right. So in light of all of that, how are you looking on the marketplace? What are you bringing to the market? What you think is interesting? What do you think clients should be engaged with?
All right. So what I bring to the table as an investment banker is essentially bespoke services, right? So it's understanding bespoke, bespoke as you put it, services. So what that means is essentially understanding your current circumstance as somebody who needs capital, and understanding where it is that you want to be in the next 3 to 5 years or less. All right. So by understanding your business, by understanding what you intend to do with your business, we can then develop a structure for you. And in some cases, it goes above and beyond what you would have potentially expected, right? So it's creating a solution that you never even thought about yourself in many cases, right? To achieve the ultimate objective of bridging the gap between where you are now and where you intend to be.
Okay. Now that's very interesting. So, I mean, give me an example of a solution that a company might not have thought about themselves, but you can bring to the table.
Yeah, man. So, I mean, when you think about a business, generally, the first mode of growth or the first mode of expansion is organic. And organic in this case means I have a business where I sell goods and or services. My first thought as it relates to, our general first thought rather, as it relates to improving that business is to sell more, right? To increase revenues, to increase sales, to get more customers, to expand organically, right? But eventually that kind of levels out, it peaks, at which point you have to think to yourself, all right, how do I get to the next step? How do I make the next move? How do I grow more? And I think most persons think of a loan, right? So, I mean, banks generally promote this. We have small, medium size enterprise loans that you can come and you can get, right? Now, because of that, the thought process is, all right, I need a loan to grow my business.
Yeah.
But that's not necessarily the case.
Okay.
What you need to grow your business is capital. And that capital does not need to be taken in the form of a loan.
Okay.
So you come to an investment bank and we look at your financials and we say, all right, based on how you are structured now, based on what you want to achieve, and based on the cash flows of your business, perhaps a better way is we defer the payment that you would have been making on a loan, right? We give you what we call a convertible preference share, which essentially positions us as the investment banker to provide you with the capital, and then later on down the line we can convert that preference share into what we call common equity, right? A common equity gives us a stake or ownership in the business down the road if we want it, right? So the benefit of that now, Raul, is that we've understood your business and we know that, listen, you're growing and you want to grow further, you want to grow faster, right? We can provide the capital now. You don't necessarily have to pay us back now, right? In fact, if we convert that preference share, you never have to actually pay us back physical cash, right? We can convert that into equity, list you on the market, and thereby get value for ourselves. And you would have gotten value from the start to the finish of that execution as it relates to the provision of that capital.
So you work magic.
Along those lines, I suppose.
No, but that's good. That's good. So that's real value. You're really partnering with business in a very cash flow efficient way.
Yes.
To get the kind of expansion that they want.
Building nations, right?
Building nations. Yeah, man, we like it. So if I am the greatest chewing gum company in the world, I can continue to sell case by case and save over the next 49 years, or I can call Awah,
get the money now, expand the business faster, and make it work for both you as the client and us as the investment bankers, right? There's no need to wait 49 years. There is capital at hand to be unlocked. And there are multitudes of persons, not just locally but regionally and internationally, who continuously have capital and want to put that capital somewhere. Right? Our role is to gather that capital, right, and put it into the hands of people who want to direct that capital towards its most efficient use. In this case, it will be gum. Yeah, I mean, to the extent that you've looked at the gum market and you say, boy, this is severely underserved, and you know that we can really build out a gum factory and we can really do this thing. We can do it now and we don't have to wait 49 years to get it done.
Right. Sounds good. All right. So, I mean, because you kind of bled into what I was going to say before. I mean, where I was going to say next, because if you have a company, like a more established company, but you're seeing pockets of demand, but your organic cash flow just doesn't enable you to expand in 6 markets simultaneously. I was going to say, what is the solution there? But it sounds like it's along similar lines.
Yeah, man, it is along similar lines. So at the end of the day, Raul, capital is what is utilized to go beyond borders, right? So if you think about many of the multinational organizations globally, to make the step towards expansion, they had to get capital. So if you think about it, right, think about the largest companies in the world. Most of them, if not all of them, are listed on a stock exchange, right? The very nature and the very purpose of a stock exchange is for investors to take their money, their capital, and provide it to an organization so that organization can use that capital to its most efficient use and benefit the organization and benefit the investors who would have initially provided that capital, right? So if you're thinking along those lines, if you're thinking that the largest global organizations are listed on stock exchanges, then obviously to get to that point, they needed capital from investors. So capital is the bridge.
Okay. So you're a capital allocator.
We put capital in the hands of persons who can definitely allocate it better than the everyday man.
Okay. All right. But all right, I mean, we spoke a lot about bonds. There's a lot going on.
Yes.
Rates going up.
Yes.
People take a bath in some of the long bonds.
Yes.
Right. There's a lot of headlines, a lot of uncertainty. So, like, what is your message to clients in that kind of environment?
All right, so I mean, I've said this before to persons in general, right? Very often we're met with circumstances and periods in time where we have extreme volatility and extreme uncertainty as it relates to what's happening in the market and the economy at large, right? But at the same time, if you look back 20, 30, 40, 50, 60 years, 100 years, this is nothing new in the sense that, we're having a period where we're having shocks, right? We're having changes of at astronomical levels, right? So to speak, right? But at the same time, no matter how far back you go, you realize that none of these periods last forever. So the Great Depression lasted 10 years. But the reason that lasted 10 years was because we were in a period in time where economists, financial experts, market experts, the whole shebang, they never understood economics at a fundamental level, right? They were developing, they were early stage, they were almost, think about the Renaissance, they were growing, so to speak, right? They were figuring things out, right? Over time, over the last 30, 40 years, we have grown significantly, right? Because science, technology, and financial services, all of these things have a compounding effect, right? So the knowledge of our forefathers are built upon, right? We don't ever start from scratch, right? So we're in a position now where we understand the market significantly more than any period in time where, it took 10 years to come out of a very deep decline, right? So I think that would be the backdrop of how things have matriculated over the last several decades. Now, with that in mind, it's also important that we understand what is going on right now, right? And I must say that in spite of what is happening now, opportunities to grow still exist, right? The cost of capital is going to be higher, right? But the cost of capital will not be higher forever, right? So to the extent that you have an opportunity, right, to grow your business, you need capital to do that. We understand that interest rates are higher now. We understand that interest rates are increasing. We understand that increases the cost of borrowing, right? But there are ways, as I indicated, as it relates to the preference shares, convertible preference shares, to soften the effects of that, right? So that you can grow the business now, right? So by doing that, by introducing these alternative methods in which you can get capital, it eases the burden of what is happening now as it relates to interest rates going up, right? So you can move forward with whatever development you have for your business and get that going. Thereafter, as I said before, these things have tended not to last forever, right? So to the extent that 3 years down the line, we're in a position, let's say we would have borrowed recently in a market that interest rates are going up 2 to 3 years down the line, let's for argument's sake say that things have improved, right? You're now in a position to refinance. You can then borrow to repay that expensive debt if you are taking that out, and that of course puts you in a better position. But definitely market volatility and changes in the market, adverse changes in the market, are not reasons to not grow your business.
Okay. So you have a solution for every environment?
Boy, there's always a solution. There's always a solution. If you think about it deeply enough, generally there's always a solution.
And then, so even with all the gloom and all the uncertainty and negative stories, especially in the first half, Jamaica market, especially the junior market, wasn't going on too badly.
Wasn't it?
But I mean, what's you thinking there? I mean, did you see it as a big opportunity to be seized despite the environment at that time? How have things evolved and what are you thinking now?
So we're talking about stocks now.
We're talking about the stock market.
All right. I think a lot of what happens in the stock market is behavioral and almost philosophical, right? To a large extent, what we have seen is a significant run up in junior market stocks, relative to main market stocks. So your larger companies, right? And I mean, the reason for that can be somewhat debatable. But I think one of the key things to think about is how companies that are smaller have the opportunity to grow more rapidly, right? And it's just a function of small numbers. You know, if you have 10, it's easier to double 10 than 100. It takes 100 steps to double 100. It takes 10 steps to double 10, right? So, I mean, that has been favorable for junior market stocks. It's just case in point, right? We've seen that. In addition to that, we went down significantly throughout 2020, and it created almost a chasm as it relates to how these companies would have performed. Right. So it was such a significant decline that, you know, rising above that in an economy that is coming back, right? If you're comparing the two periods, it's like a significant catapult of growth. So that has definitely benefited those companies, right? In addition to that, you know, we've gotten to a point in which we have a marketplace that is, I would say, governed to some extent by individual investors who have increasingly made themselves aware of what the stock market is. And
but you think that point is an important one, right? Because I mean, I've heard a lot of viewpoints. I mean, I hear people say the retail investor is very strong, you know, so it's separate and apart from whatever might be happening at a macro level. If the retail investor is feeling good, then they can still keep the market buoyant, right? So I'd love to hear your views on that. But also, you think that's a legacy of all of the work that the country as a whole has done to improve its financial management? I mean, just because in my perception, people are a lot more interested in stock market now than say 10 years ago.
I get your question. All right, so there are two things that affect prices. Prices, right? And I won't just say stock prices, I said prices in general, right? The overarching economic landscape, so the macro, right? What is taking place, that has an effect. But the second thing that has an effect is perception and how people view things. It's behavioral, it's ideas, almost sentiments, right? I'll give you an example. Netherlands or Holland, I don't remember the year, but some centuries ago, they had what was called the tulip crisis. Where people were spending exorbitant amount for tulips, which were literally little flowers. Right? It made no sense. It wasn't economically, it made no sense. Tulips were more expensive than houses.
What?
Yes, this is a reality, you know. You get me? So there's one aspect, which is the economic aspect that affects prices. But then there is the psychology and the sentiment of everyday people, and that takes precedence. Right? Because if people, nations are people, communities are people, right? And if people have an idea and that idea is collective and widespread, then they move prices. The same applies to the stock market, right? So the US economy could literally crash, right? But if Jamaican people and Jamaican retail investors are of the opinion that any stock on the market is worth buying, and we have enough people thinking that, it doesn't matter if the US is crashing or wherever, that price can still go up. So to your point, the retail investor collectively, if they have the same sentiment, can move a stock in any direction that they want, right? And we've seen that in 2020 with GameStop in the US, right? Retail investors, they ran that stock all the way up and crashed hedge funds, right? Hedge funds were considered professional investors, right? And hedge funds have significant capital. But if you pool enough small men together, one big man is not enough.
So okay, so that That's an interesting perspective, right? Small man, not so small.
Not so small when you bunch them together, you know. People build nations.
Alright, so it's interesting. Alright.
People come together.
I mean, so, you know, if we shift gears to who is Awah, right? So, other than being the anti-Thanos, like, right? When you're not snapping nations, I mean, what, like, outside of the office or outside of the narrow space of investment banking, you know, who are you? What has been significant in forming who Awah is as a person?
So I would say a large part of, you know, who I have been. Well, let me just say this, right? Everybody has a story, right? And stories are literally the combination of one and two words coming together, compiling to build chapters to eventually build a book, right? So to pinpoint, you know, specific things that have molded, you know, my character, it's difficult. But it's a combination of things, right? And I suppose there are things that kind of stand out more than others. So family, for example, I grew up with my mother, for the most part, single mother. She has 3 of us, and she worked really hard to do the best that she could for each and every one of us, right? For me, I was a second child, and I grew up with asthma. So that I think that was one of the main things that has shaped who I am now. Because I'm very health conscious. So outside of work, as you put it, I go to gym now. I eat right, and you would have seen him lose a whole of weight. You know. So I mean, I think. And I tend to focus heavily on the career. So throughout my entire life, I don't think I've ever stopped studying for more than 6 months. You know, I've always, you know, studied. So I mean, outside of work, whole heap of gym, whole heap of eating right, time with the family, having fun. I try to do that more to create some balance. And
what's fun?
Fun for me is going on the North Coast for a weekend, you know, and just doing whatever pleases me. So generally a hotel or a beach trip. I don't like sun and sea. I'm more a river guy. Can't deal with the sun and the salt.
But you said beach trip.
Yeah, beach for me mean river.
Without the sun. Yeah. Oh, beach for you mean river.
Yeah.
Oh, okay.
Just water. I just say water trip.
Interesting. So Kingston for me mean Mobile, right?
It is you want to take
No, but okay, we get it.
Yeah,
so
man.
you prefer the river.
Prefer the river.
So like a Dunn's River vibes. Yeah. But you don't reach to the beach. You stay up at the falls.
Yeah. Okay. And if I do go to the beach, I go wash off at the falls.
Okay.
Cause I can't do the salt. Okay. You know, mess up the ear, get in the eye.
No,
yeah, man.
Salt water. My ear. So
we understand. Well, you know, you can't relate.
No.
Yeah, man. Yeah. So I like that. I love good food.
Yeah.
But clearly with the health thing now, can't too overdo it. So I mean, I'd say right now, my focus has been significant as it relates to balance. There's a lot of balance, right? So if I eat, I tend to try to eat as healthy as possible. I'd say at least 80 to 85% healthy, and what that means is very little oily food.
Very little what?
Very little oily food. So
oily food.
Yeah, okay. I don't do oily food so much. I stay away from stuff like flour, and you know, if I do, of course.
All right. No, I'm just
you know. So yeah. Rice alternatives like bulgur. You know. And if you do eat rice, some brown rice,
so
keep it. But at the end of the day, in a raw, you have to take care of yourself. You know?
Yeah, absolutely.
Take care of yourself. So that has been my focus.
Yeah, and I remember I was talking to you, and you really seem to be deep in the technical details. Right, so I mean, I remember that's a boy. You know, people don't know. People say we lose too much weight, but it's kind of they don't know how much weight is healthy to carry. So I mean, I'm 200 plus pounds, 203 somewhere. How fat am I? I mean, tell me about how unhealthy. Teach me about the unhealthiness.
Well, I've taken this from my perspective, right? So I'd have to. I'm not a nutritionist. I'm not a dietitian.
Yeah.
Right.
Yeah.
You look fine, but to give you a proper answer, we'd have to do local calculation and so
BMI thing.
BMI and muscle density versus body fat mass. So for determine
visceral fat. And all that stuff.
Yeah.
Okay. So you track all that stuff?
No, Rob.
Oh, okay.
Me somebody will do it.
Sorry.
Yeah. No, but it's important, right?
Yeah.
It's like I think a lot of people don't take it as serious as they should.
Yeah.
Until they have to.
Yeah, and then it's kind of late in the game, right?
That's a problem, Rob.
Yeah.
You cannot wait till the doctor said, boy, you don't look good.
Mm-hmm.
You have to go cut back on this. No.
Yeah.
Regulate yourself early. And that's what I've said.
Awah. Take a whole heap of discipline.
Rob. For me, getting down that road, as I had said to you, was almost because of my health issues, right? So I had severe asthma problems since the start of COVID.
Yeah.
Right. And when I say severe, I mean like every day it was hard to breathe.
Every day. And this is in a COVID. Pandemic, so
I was freakishly, I don't know if I can use that word.
Don't use it.
I won't use it anymore. I was just very, careful.
Yeah.
Extremely careful.
Yeah.
Because you already have breathing problems and you have COVID going on. You don't want to catch that, right? So, in fact, when the vaccine came to Jamaica, right? I was one of the first people to get that time.
Oh, really?
Yeah, man. April. I find myself. But guess what? All of people been debating about at that time whether the vaccine is right or not. And so when you're sick, Rob, you say you're sick, and if you catch this, you might just die.
Yeah.
There's no, if, but you just go get the vaccine.
Yeah.
Right? Because if the probabilities of you getting it, as the government said, more than likely everybody will catch this thing at some point.
Yeah.
Right? So if your probability is close to 100 to getting it, right, and you have a vaccine, and people questioning the vaccine with zero science, then take the vaccine, because I knew my case, right? So I was one of the first people then. But essentially I had to deal with that. I had a lot of stress. As I say, I've never gone more than 6 months without studying. So studying and handling that was hectic for me. My doctor said, yo, you need to just cut off, just bring yourself back. Because I don't know what I'm going with you. Like him say, yo, me get everything. Yeah, him say, yo, me get everything. So I don't know why you're still sick. Yeah. So at that point, of course, you have to worry, because I go to somebody who should be able to help you, but at the same time, you're not feeling like you're being helped, and he's saying that, listen, I'm tapped out in terms of what I can do. Yeah. So at that time, him say, oh, you need to focus on exercising. But it's so bad at the time, bro, that him say, don't you try run. He said, can I swim? He said, don't swim.
Oh, whoa.
Yeah. He said, don't swim, because the chlorine might affect you. He said, walk.
Just walk.
And even walking up a flight of stairs was hard. Kid you not. Look at me. 25. Walking up a flight of stairs was rough. So at that point, obviously, I'd have to kind of just try revisit everything, which is what I did. Yeah. And it has helped significantly.
Okay. So you're feeling better now?
Much better than before, but still have struggles, but yeah.
And you think the weight loss has been helpful?
Yeah, eat better, yeah. Go gym. Gym is nice, Yeah, well, I'm sure. Some days. Some days rough.
Alright, well.
Some days rough.
Listen, brother, I'm happy to hear that things have improved. It's a pleasure working with you. Happy to have you.
Yeah, right? Yeah.
Thanks a lot for joining us.
It's a pleasure to be here, all.
Yeah, man. Listen,
yeah, man, cool.
You've just listened to an episode of the Barita Podcast. The Barita Podcast is available on all Barita's social media platforms. If you'd like to invest with Barita Investments Limited, visit our website at barita.com or contact us at 876-926-2681 to get started.